We have some interesting times ahead, but let me tell you, if they did it today, it would, and they did it on a one-to-one basis, that it would be north of $40,000. By the time they do it, and I know this sounds outrageous to people because they get blinded by the numbers, right?
Could a gold revaluation to $40,000 be on the horizon? Lynette Zang dives deep into the global economy, the looming threat of hyperinflation, and why silver is rising as the ultimate inflation hedge. If you're looking to protect your wealth and understand the challenges facing fiat currencies, you won't want to miss this. Let's unravel the future of precious metals together.
Well, look, it's really easy to determine what the true fundamental value of gold is. I am not expecting Wall Street to tell me that revaluation, it will happen 100%. I'm not even a teeny weeny bit doubtful of what that future is. What I don't know is what that would be in terms of dollars, let's say, by the time they do that revaluation. But that revaluation will be because the government is attempting to get that confidence back. So that means that inflation has really risen very visibly higher, maybe even to 50 or 100% or wherever it's going to be at that time. And so they'll lop off a whole bunch of zeros. And I can tell you, if they did it today, it would, and they did it on a one-to-one basis, that it would be north of $40,000. By the time they do it, and I know this sounds outrageous to people because they get blinded by the numbers, right? But if you went back to 1913 when somebody had a $20 1 ounce gold coin and said, one of these days that's going to be trading at $2,600 or $2,700, that person would have seemed outrageous at that time too. So it could be 3 trillion, it could be 100 trillion. I personally have a $10 trillion Zimbabwe note, so I am a trillionaire in Zimbabwe, but what does it mean? It means nothing. So if they did the overnight revaluation today on a 1-for-1 debt for gold ratio, then it would be north of 40,000.
I think Andy Schechtman mentioned 142.
You know what?
Like 1,000.
Why not?
Yeah.
Right? But the way that I get it is, since the gold is money, it's sound money. The dollars are based on any fiat currency right today is based on debt. So you just take however much debt they're admitting to. Now, where Andy is going could also be all the derivatives. So all of those bets on the debt. So this, when I'm talking about above 40, I'm not considering that. I'm just taking all the debt that they've admitted to and dividing it by every bit of gold that exists. In the ground, above ground, doesn't matter, right? So, yeah, we have some interesting times ahead, but let me tell you, if it gets to 42,000, 140,000, 30 trillion, whatever that number is, at that point, everybody will be quite clear that government debt-based money has absolutely zero value. Well, but even this system is trying to make that invisible transition into the new surveillance-based currency. I am not okay with that. The battle for me has been, and really, community has always been part of my mantra. We've talked about this a lot, but over the last year and a half or so, community, both locally and especially globally, has risen to really tippy top in importance for me. Because if we just sit back and do nothing about it, then you're going to get what you're going to get, and you have to accept it, and it's your fault, right? And I can't sit here and tell you, Kai, that I absolutely know that we can, have a difference in the new monetary system, but I'm going to try, and I'm going to do that by building a global community. And so if governments can do that, and we're seeing that really, the global central banks have bought more gold now, and we don't have the final numbers for 24 yet, but even going through the third quarter of last year, they've bought more gold than they ever have historically, going back to when they started tracking it, because that's how you maintain your independence and your own personal sovereignty. And why don't we as individuals take a page from the central bank books? Because who knows more about what they're doing to the fiat money than they do? Okay, what I'm most concerned about is this massive debt wall, both government debt as well as corporate debt, as well as individual debt that is coming due. And if you can't pay it, then you roll it over, and the interest rates, because this is really why the central banks want to lower the interest rates, is because of this massive wall of debt. In the US, the level of new debt that they're having to issue is huge, right? I mean, it doesn't even dip down a little bit in what they're anticipating is going to happen. But that's why Fed Chair Powell wants to drop the rates, but we've been compounding interest forever, right? So that means that we're not paying any of the principal, and the interest that we haven't paid back goes into that principal, and now we're paying interest on interest on interest. So my key concern is particularly with treasury bonds, or 10-year notes really, which is the foundation of the global system. And we don't have anybody supporting that, because there is a run on the dollar that is happening right now, very similar to what we saw in the 1960s when foreign governments were sending in their dollars and pulling the gold out of our system. So much so that it forced President Nixon to, they say, close that gold window, which doesn't sound so bad, but it really forced him to hand over, or what he did. I don't know that it forced him to hand it over. Well, I'll go a little bit further than that, but I think that we're going to see a lot more inflation this year, and a lot faster. So I think that there is a level of hopium that's out there right now that President Trump can fix things. And nobody can fix things, because we're at the end of the currency's life cycle. There is officially no purchasing power left in the currency. The only thing holding it together is the confidence of the public. So if something happens and that hopium is destroyed, then I think we're headed into that hyperinflation will become apparent to everybody, because I'm certain it's already started. I don't think you're interpreting too much into it. I think people aren't interpreting enough into it. And it isn't just in the U.S. This is a global phenomenon. And the problem is that central banks want to lower the rates. So with the inflation ticking up, it's hard for them to justify that, because there's only one way to fight inflation, and that's with deflation. And the way they do that is by raising the interest rates and having fewer people borrow and raising the rates and having fewer people borrow and spend, which is deflationary in a consumer-driven economy. And what they want to do is lower those rates so that they're generating more inflation. And the problem is there's so much cash that's still floating out there from all of the trillions and trillions and trillions of dollars worth of debt that has been created since 2008. It isn't that they created and that money evaporates. It goes into these fiat money or government-based money, intangible assets. And that is very, very good for physical gold and physical silver.
If you found Lynette's insights valuable, don't forget to give this video a thumbs up and share it with others who need to know what's happening in the global economy. Make sure you subscribe and hit that bell icon so you never miss an update on gold, silver, and how to safeguard your financial future. Thanks for watching, and we'll see you in the next one.